Hello, Master Traders. This is Dan, and we're going to do something a little different this weekend. Instead of doing a video on open and closed trades for education, because of the broader markets being at such a very unique turning point here in terms of the failure reversal that we had last Thursday and Friday, and we can actually break out for continued bounce or break down from here. And we found an amazingly not high number of very bullish stock and option trades this weekend, regardless of the broader market's confusion. So what I decided to do is put this video together and review every single trade idea that's in the weekend letter of both the master trader, swing, and options trader, which, as you know, we buy and sell options, both as income trades and directional trades. And our weekly options trader, the sole focus is to sell options that expire 10 days or less using the master trader strategies around compelling patterns, and the goal being to keep as much of that premium sold as possible as we manage it through conclusion. So here's the swing advisory letter format. Starts off, as always, Greg gives amazing comments over the broader market, looks at our major sectors, analyzes the Dow in great detail for education, market bias, and then he does his weekend video review of the markets and internals and sectors and bias, etc. Then we have stock trading ideas. Obviously, I always put this resources page right here on every letter because there's valuable information in there. So let's begin. So many bullish and bearish stock and option trade ideas. Here's the first one, SWK. It's in a downtrend, declining 20, declining 50. It's a breakdown. So this is a format of all of our trade ideas. We give the date, the symbol, the strategy that we're doing, stock or option, and where to enter, the technical setup, because everything's education here also, and then a stop loss. And then in Telegram, we update in real time adjustments to these open positions. So you could be at work, out on the golf course, and Telegram will come right to your smartphone and give you adjustments on these, whether managing stops, taking partial profits. So this one's just a breakdown at the declining 20 MA. Ramp, buying stock, breakout of bullish inverse head and shoulders. Downtrend created a momentum move. We have a gap reversal, 100% retracement, bullish price action over last week's high. That should go higher. WCN, bullish 1, 2, 3 continuation at the 2200. Bottoming pattern. This was started as a big W pattern, churned its way back up here, broke out again, and we still have a huge price void. A 1, 2, 3 continuation pattern is a wide range fat green bar with little tails, and then one or more inside bars that stay in the upper third of this bar. We buy over the high of the two bars, provided we have a price void like this, and provided they're not far from the 20 period moving average. And so this one is a technical, beautiful setup. Here's another one, BLD. Different pattern, of course, but it's bottomed here. The 20 MA is now rising. We have a closing breakout. And because of this consolidation and price action, it should get through this prior high. And then you can see we have a price void all the way to the 200 on BLD. RMD, another 1, 2, 3 continuation, which makes sense because Thursday we had big bullish green bars all over the place. And Friday was an inside day in the broader markets also. And that's why I was saying in the green trading room that we should have a ton of 1, 2, 3s. And as you can see here, we do. And what Greg and I do is go through our scanning, our usual universe, and we apply our approach to hand pick the best of the best. And that's what these are. Big bottoming pattern, bullish 1, 2, 3. It broke out of this bottoming pattern and a price void. CRL, same but different. Bottoming pattern above the 20, closing breakout inside bar, target 50 MA. CVS, a sell setup. What is a sell setup? It's a retracement and reversal at resistance in a downtrend. So I got declining 20, declining 50. I had a retracement here. In reversal, it made what we call the big turn. The big turn at the 20 and 200. Other concepts I pick up on. Big fat green bar ignored, and I got a price void. So that's a short under Friday's low. RCL, same but different. It's in a downtrend at the 20. Red bar ignored. Green buyers stepped up on Thursday. Inside bar. Under the green bar. Target somewhere a couple bucks, maybe down to the low 50s. MNTS, this is what I'm labeling as a continuation breakout at the 50 MA. Why is it continuation? Well, because we really should have been in it on Thursday. This is what we call a 180 reversal, big fat red bar followed by big fat green bar. So it negated the bearishness of that bar. And we also call this, we've coined it, what's called a bear sandwich. You have two big green bars with the sandwich, which is the red color, is the bear, negated. You need a price void, like every pattern that I'm showing you here. Big price void, and so we're going to go ahead and buy that over Friday's high. BHC, just a vanilla breakdown trade, relative weakness, couldn't bounce with the broader markets. EXAS, little 180 breakdown. It had a nice green bar on support, like it should have, but in a downtrend. At the 20 MA, declining 50, declining 200. You see the red up here. That green bar ignored, closing breakdown, that's a short under the low. And because we have so many trade ideas this weekend, depending on which way the bias is going to turn out on Monday, I'll end up canceling probably a lot of these. But we'll let the market dictate our bias that exists right now on these patterns. APYX, another continuation breakout. This is what we call a pro gap, pro igniting bar on pro volume price void. It's been consolidating in a range here in the upper part of this WRB. That should move higher into the void. RBX, another bottoming pattern. This is what we call a breakdown failure, a bullish new low divergence. It made a new low here, snapped right back. The 20 MA is curling, red bar ignored, and it's a closing breakout. Knock here, there's a couple strong military stocks on our list. So this is, a normal head and shoulders is left shoulder, head, 100% retracement, and then bullish time consolidation. And one of our traders actually came up with this name, and I liked it, Medusa, from the Greek mythology. So we have two heads, but we have the same concept. So ignore the names. What Master Trader teaches you how to read objective price action. So this was 90% retracement, bullish, higher low, bullish. Whoops, made a lower low. Now I have 100% retracement with these two power bars, red bar ignored. I have 1, 2, 3, 4, 8 bullish bars, bottoming tail at the low of the day was a big fat ugly red bar, closed right back into the range with a bottoming tail, and wide range closing breakout with a price void on the daily and weekly chart. Driven, greater than 100% retracement is strength. You can see all the MAs starting to curl up, and I have 1, 2, 3, 4, 5 bullish consolidation bars with another closing breakout. That should go higher. All right, so those are all the stock trading ideas. And again, I keep reminding you, this is an unusually large amount of trades. Sometimes, but the market dictates the setups. We don't. There's some service they say, oh, I'm going to come out with 3 new trade ideas every Friday at 3 p.m. I'm like, but where did that rule come from? We give trade ideas when the opportunity sets up, and when not, well, we use our patience and discipline to stay sidelined and not get chopped up. All right, so now we're into option trades for the swing and advisory letter. So we both buy and sell options. Remember, when we get to the weekly options trader, it's going to be selling options only that expire 10 days or less. Let's continue. So over Friday's high, we're going to sell $60 puts. So this is a bottoming pattern. I have a bullish 1, 2, 3 continuation breakout from a bottoming pattern and a bullish retest at the 20. So see, this broke out from a bottoming pattern. Now I got a 180 retest on minor support with a 1, 2, 3. So if that takes out the high, we're saying, you know what? I'll sell these $60 puts, which means I always give you the amount, so I'm saying do it for $1.10 a share. If you sold 10 contracts, that means $1,100 immediately hits your account. It's yours to keep. In exchange for that, you have an obligation to buy 1,000 shares of SI on or before expiration at $60. But look, we're entering this over 80. So the stock would have to fall $20 in 2 weeks for that to become in the money. But if we don't mind owning something based on fundamentals, we're like, yeah, I'll take it at that improved cost basis, then we don't worry about a stop loss. But the majority of the time, we're speculators, we're in this to make money. So our stop is going to be under this pivot right here once it triggers. AVAV, this is same concept. It's a 1, 2, 3 continuation. And we're going to sell a 90. So here's my $90 strike right here under this pivot low. And then we're going to buy the 70s. So instead of selling that put naked, we're selling one. We're taking some of that money to buy a further out of the money put. The difference of those two numbers is the midpoint. Whatever you get filled on is the credit that goes right into your brokerage account. So I say the midpoint closed at $1.20, and I'm telling our subscribers, look, I want at least $1.05 on this position, and we set alarms and monitor them, and we get the luxury of adjusting in real time. Boeing, this is a bullish 1, 2, 3 from a bottoming pattern with a price void. It looks like target somewhere 150 to the declining 50 MA, which is this prior pivot over here. So this one we are buying in a call spread. So we're buying the 145 in the money calls. I'm sorry, that's out of the money also. So we're buying out of the money 145 calls and selling the out of the money 155 calls for midpoint. So this one I can't guess of what that's going to cost. It closed at 212. The maximum gain on a bull call debit spread like this is a spread with $10 less debit, whatever you paid for it. Just hypothetically, say you paid $250 for it. So then we're risking $250 to make $750, and we will manage it in between with the charts as we always do. Redfin, this one we're just going to buy $8 calls. I don't want to cap my gain by selling an out of the money call, so we're going to buy in the money calls. This is another 1, 2, 3 from a bottoming pattern. And when we buy options, the main purpose of that is we're participating and profiting on our directional bias with leverage and limited risk. MDT, it's continuation breakdown. Look at these 3 moving averages. This was a professional bearish gap. It couldn't bounce much. 180 reversal, bearish price action, closing new low. We're going to buy the opposite of the other one. Instead of a bull call debit spread like on Boeing, we are going to buy a bear put debit spread. So we're buying one put, selling a further out of the money put, and the difference will be our debit. Maximum gain again as before, spread with less debit. I know I'm talking fast, but all of this we teach in our option seminars, of course, and in our live trading room. You come in and we walk through, and you get to learn a lot in real time. Dunking here. Also, we're just going to buy some puts here as a directional trade. It's rolling over in a downtrend, 20, 50. All of this closing breakdown now makes all of this overhead resistance. I got my price void, and it just looks like a no-brainer bearish setup, and whenever I find, some people might be saying, well, why do you buy options sometime, Dan, and short the stock the other ones? The primary reason is liquidity. That when I find a directional setup that I want to participate in. I look at the options and see if they're tight spreads. And if they are, then I prefer an option trade because of what we said, leverage and limited risk. So if I stop out, I'm going to lose less than I would have had I've been trading the underlying stock. This one's another short put, bullish 1, 2, 3 continuation from bottoming pattern. If it takes out the high of these two bars, we're going to sell the 260 puts way the heck down here. And that's the bet we're making. I'm saying let's do it for a limit of 165 a share. As long as this stays above 260 in 2 weeks, because this will be tomorrow, June 6th. We're going out to June 17th, so that's 10 trading days. We're using our approach to say I don't think it's going down to 260 unless this pattern totally fails, in which case we have our stop loss. Piton, another one here, just weak animal here, just very weak. Little continuation of a bearish 1, 2, 3 there. Another military stock, inverse head and shoulders here. So here's our left shoulder, here's our head, here's our 100% retracement. I love this bottoming tail on Thursday. So that was an ugly red bar at the day's low. Snap right back, close right in there, gap down on Friday, closing breakout, price void. We're going to sell the 230 puts, which are under this 200 period moving average, another 2-week short put play. And then, we have other information down here as always. So now what I'm going to do is let's go to the weekly options trader and show you the trade ideas that we have for this week there. Here it is, weekly options trader ideas for the week of June 6th. And put some commentary in there as always also. Educational stuff, market stuff, and here we go. And we also have, we keep a current spreadsheet and members area of all open and closed positions, so we don't hide anything. You can go look at prior trades. All the open ones there are there with current adjustments, in addition to a Telegram channel where we send new trades during the week and updates. IWM here. So this is the most bullish close of the 4 index ETFs. This is a bullish 1, 2, 3 continuation after this big W pattern. And you got a price void. So, I'm not sure how much further it will go. But if we take out Thursday's high, then we're going to short a bull put credit spread. So we have a compelling pattern. We say, okay, where do we think it's not going to go by the expiration? And we picked June 8th because these index ETFs have multiple expirations during the week, so we don't need to go out to the following Friday or monthly if they don't offer weeklies. So we're taking 2 days of risk. If this takes out Thursday's high, we are saying, I don't think it's going to go under Thursday's low for 2 days. We take in 60 cents a share on a 10 lot, $600 if it stays above that in 2 days. There's the strategy, bullish 1, 2, 3 continuation, and as always, stop loss. Snap. This is the beautiful thing of selling options is we can sell credit spreads or naked options on the same compelling directional setups that we give to the advisory letter, but our population of tradable ideas is much bigger because all we're doing is calling a short-term bottom or top. So I would never buy this pattern. This is in a nasty downtrend, nasty gap on volume, but it closed at the low and held that low. Then it came up here and it's working on possibly a higher low. It's not a textbook 1, 2, 3. So you can see I'm not calling it that because this green bar on Thursday it's not a big fat wide bar like one of these over here. I'm just calling it a bullish retest after stabilization from a bearish gap. So I'm calling it exactly what it is. If it takes out Thursday's high though, we're going to sell just a $2 wide put spread, and we're predicting last week's low will hold. Google here, the Qs rather look the weakest of the four horsemen, and so here's one of them. Google, although this is a bullish deep retracement, the fact that you had a bearish gap down into Thursday's bar with a weak close, if it trades under Thursday's low, then there's a high chance that the Qs, the NASDAQ 100, is doing the same, and then our bearish scenario is going to be playing out. So we're going to sell an out-of-the-money bear call credit spread. And on these expensive ones, we routinely just go even much higher than our stop loss. Our stop loss will be Thursday's high. But I just said, hey, let's just sell the 2400, $20 wide, closed at 250. Let's see if we can get 210 out of it. And we also, I'm not going to get into it now, but we look at open interest levels as confirming price action there. TDOC here, another bottoming pattern of 1, 2, 3 over Thursday's high. We'll sell a 32.28 put spread. Now the reason we prefer spreads is just because it's less buying power requirement at the brokerage firm, because the buying power is going to be the spread with less credit received per share. And if you do it naked, it's a little bit more. It's 20% of the out of the money strike, less a formula of how far out of the money it is. And if you get a catastrophic gap against you, our loss is less. Your max loss on selling any credit spread is a spread with less credit received. And then some people might say, oh, well, isn't the reward to risk out of whack? And my answer is, could be, because your maximum loss by definition is much more than your potential maximum gain. That's a fact. But it's similar to selling insurance or running a casino that we're taking in premium over and over and over and over again, because the probability of keeping that money is very high. But yeah, of course, we have stop outs when the pattern fails. Uber here, another bullish 1, 2, 3 consolidation from a bottoming pattern. We'll sell the $3 wide put spread, stop Friday's low. MDB, this was a gap on earnings last Thursday, so over Thursday's high. Similar to what we did, and I showed you a number of short puts in the advisory letter, but those were one additional week out. In this letter, we only sell options that expire 10 days or less. For the most part, sometimes I make exceptions on a good pattern. So we'll sell the way out of the money 227s, stop under 235, manage in between. NOW, it's not a textbook 1, 2, 3 because this inside bar is a little deeper. So I just call it's a wide range bar continuation pattern if it trades over Thursday's high. And we'll do a wide, $30 wide. Carnival Cruise Line and RCL look the same. Under these lows, we will sell an out-of-the-money call spread. There's RCL, the same, has to trade under Thursday's low. Then we sell an out-of-the-money call spread. IIPR, nice W pattern here, 20 MA flattening out. Nice inside bar under Thursday's engulfing bar. Over Thursday's high, we'll do a $15 wide put spread. Carvana here is in what we call a death trend. So under Thursday's low, we'll sell an out of the money bear call credit spread. Marvel, again, technically it's not a 1, 2, 3 because it's inside bar, didn't hold the upper third, but it was a bullish gap on earnings, a bullish gap engulfing close at the 50 over Thursday's high. We'll sell an out of the money put spread. Qs here, I mentioned along with Google, if it trades under Thursday's low, then we're going to short an out of the money bear call credit spread. PayPal, beautiful 1, 2, 3 from bottoming pattern, 20 MA flattening out over Thursday's high, put spread. NVAX, now this one's, I put a note here, it's a biotech, so there's higher gap risk. But that was an ugly gap, range expansion bar on volume, bearish trading range, kind of a classical technicians would call that a descending triangle. And we're shorting the way out of the money call spread up here, 60.75 for 5 days of risk. Netflix, another 1, 2, 3 bottoming pattern, 20 MA flattening out, big price void. We'll short an out of the money put spread over Thursday's high. Etsy, another one of these failed green bars in a downtrend. So if the bearish case plays out this week, then we'll be selling an out of the money call spread under those lows. Boeing looks great. I remember the advisory letter had a bull call debit spread. So it's the same pattern with two different ideas now. That was buying options as a directional trade. This is selling a put spread under Thursday's low over the high, and we're taking in that money. So they have different risk profiles. And again, that's what we teach in the course, is everything starts with give me your bias, and then we will teach you how to pick and manage the proper option strategy. This one also, remember Redfin, we said we were going to buy calls and the $8 calls in the advisory letter. In this one, we'll be selling the $9 puts. Same entry, it'll be same management. All right, so that's it. I know it's a long video, but I hope it was very educational, both so that you can kind of see our approach to the market, how we find trades, how we put them through our checklist. Do we do stocks, options, buy options, sell options, and also gives you a flavor if you haven't tried out. Most people get both of these letters, but some people don't for whatever reason, and perhaps this will open your eye to sign up for a month and check it out. As always, email Greg or me with any questions, and good trading this week. We're looking forward to the futures opening tonight, and start developing our bias for the week. Good trading all. See you in the next video.